Don't quote me on this, but I think that force will be quite strong. So that force may be strong enough to offset the 4-year cycle. Who knows?
Yeah. So you're saying next year bull market?
We may be seeing a super cycle. Wow. So we'll see. Yeah. I'm not sure. Yeah.
We'll see.
Yeah.
And there you guys have, of course, CZ, the founder of Binance, speculating on the fact that the 4-year cycle is essentially dead and that we are in a super cycle for crypto. Now, if you guys did watch my previous videos, then you already know that I have been talking about the 4-year cycle, specifically addressing the liquidity cycle, which has been the main driver of this market. Even though everyone is still locked in on the 4-year cycle narrative, we already know that liquidity has typically aligned with a 4-year time frame. And even going off of the typical 4-year cycle, you know, we are right on par with 2026 being the bullish year for the market to really officially peak, and also having the largest wave of the cycle, aka alt season, officially hitting the stage. Now, when we start to hear the idea of a super cycle, I do get a little bit concerned though, because if you guys do go back to 2021, we were hearing super cycle, blow off top, and that was right around the end of the cycle. Now, this time around, the difference is that we really haven't witnessed a big move in the market for altcoins, so it would make sense that we have a much larger run-up for the altcoin market. And so far, 2026 seems like a very good time frame for this, considering all of the factors. Now, with this post in mind, let's talk about a few things, because the biggest focus from CZ was the fact that this could happen due to US politics, the Fed easing, and institutional adoption. And that second one is very important because the Fed easing will really ultimately open up the door for TradFi to go crazy as well. So with stocks booming, we will start to see all other risk on asset classes follow, and that's of course crypto. Now, we still need to see the Fed ease. So far, the Fed has been pretty, I would argue that they've been pretty transparent on their path here. We will most likely get another rate cut going into tomorrow, aka today, and that's going to be the third rate cut of 2025. That would align with 6 rate cuts over the last 2 years. And that would also align with 2026 being the year where we don't have any more rate cuts, but we also start to see a shift around these markets because, again, we do know that back in 2019 into 2020, we witnessed 5 rate cuts. And then 2021 was the year where we had no rate cuts because typically rate cuts are a little bit bearish. I mean, a lot of people think that rate cuts are so bullish. However, they're not bullish initially. They are a lagging factor. They always have been. So if we go back to 2020 to 2021 was very bullish because we had no rate cuts. And I'm expecting 2026 to essentially be the 2021 of, this time period. Now, outside of that, we have been witnessing some gains across the board for a lot of altcoins. We did see Axler earlier today. It was up almost 20+%. I think that it hit a nice high peak of about roughly, it was like 13.5 cents. I did see on a few exchanges that this thing was wicking significantly to the upside. But, again, some altcoins are a little bit different. A lot of them are still bouncing off of the lows. So a lot of these gains, although they seem great, they're not really gains on the macro scale. Now with Bitcoin, Bitcoin did have a nice wick all the way up to about roughly 94.6K. If you guys do know, I have been following the 4-year chart or the 4-hour chart, sorry. And in my previous video talking about the 4-year cycle, I said that right now, I don't really care about the macro view. I don't care about this 4-year cycle narrative. I don't care about, what we're going to see going into 2026. The main thing that I'm focused on is bullish structure, and we are starting to see more and more bullish structure formed on Bitcoin. That will get us to the macro bullish structure as well. And right now we do have a series of higher lows, and technically we do have higher highs, which is very good. Now, the main thing that I'm looking at here, and let me just remove everything on the chart. The main thing that I'm looking at here, especially going into the weekly candle close, Okay, this is the number one thing that I'm looking at this week. I want to see a strong close over this 93.3K level. Reclaiming this will be very bullish because that's where a lot of our support is going all the way back to the December, November rally of 2024. And if we could flip this, then we could start to build back towards some of these other support zones and also some of the resistance zones on Bitcoin. So far, this chart has been looking very good. We've been talking about the uptrend. We've been talking about the higher lows. We've been talking about, what we could expect next. Still, we need to be very cautious on Bitcoin, especially going into today, because today is going to be extremely volatile. So I wouldn't write off the idea of Bitcoin having this strong swing low of about roughly 5%, back down to like 87, 88K. We might even wick below this, hit 86K or so. And it would be expected. And then we start to have that rally back to 100K plus. That's what I'm really looking at when it comes to Bitcoin. Outside of Bitcoin, Ethereum has been kind of in the same sort of situation, except Ethereum's chart looks a little bit more bullish than Bitcoin because we do have clear higher lows, but then also our higher highs have been more, there's a little bit more momentum behind them, especially this most recent one having that 3,400 level being targeted on Ethereum. This chart looks very, very good. Again, very similar to Bitcoin though, and let's look at this on the weekly. Main thing that we are looking at here when it comes back to Ethereum is flipping our prior lows right around roughly 3,500 almost. So this is the main focus from my point of view. There's definitely a lot of resistance around these ranges as well, going all the way back to like December, even back into the summer of 2024, and then also back into March of 2024. So it's going to take a little bit of time. The main thing is that we should be extremely bullish on Ethereum once we start to flip like 4,100, because that's going to clear all of 2024's resistance levels, and that should get us back to the all-time high. And then last but not least, of course, with XRP, XRP is sort of in the same exact scenario where we do have higher lows. However, we have yet to create bullish structure on XRP's chart because we are in a series of higher lows, but also lower highs, and we do not want to see that. So we want to see one of these highs get broken over when it comes back to XRP. And until that, happens, we are going to just be in a very, very sort of negative, scenario when it comes back to the price action sort of structure. So, I want to see a little bit more out of XRP, especially on the daily. So far, we have been building a little bit of support around like $2. But I really want to see us break over this daily resistance and get a daily candle close above $2.23. That would be very, very good for XRP. Now, let's talk about this super cycle. Let's talk about the Fed easing. So obviously, yes, today is the big day. We are going to have the Fed FOMC meeting officially begin at 2:30 p.m. because all of the other noise leading into this doesn't matter. The main thing that we are looking at is what Jerome Powell is going to be providing us. He gives us an insight on exactly what the Fed is expecting going into 2026, if we get a rate cut or not. And then also on top of that, we do get a few updates regarding the labor markets, which are also a major, major catalyst for risk on assets. So we need to ensure that we do pay attention to what Jerome Powell is saying at this meeting. I do have a very, very solid outlook on this being a bullish meeting. However, we still need to take a closer look into what the Fed did in the beginning of the month. And this is a great post from Crypto Rover regarding it. So we do have the Fed just took one step closer to QE. Yesterday, the Fed injected $13.5 billion into the banking system, the biggest one-day liquidity boost since 2020. And it happened on the exact day QT officially ended. This is not a normal move. Banks borrow from each other overnight, but last night many banks suddenly needed cash at the same time. When that happens, overnight borrowing rates jump fast, a clear sign of liquidity stress inside the system. This same pattern appeared in 2019 repo market spike, early 2020 funding stress before COVID response. Both times the Fed stepped in aggressively to stabilize the system. They did the same thing again yesterday, a $13.5 billion injection in one day, means that the Fed didn't want this stress to spread through markets. It does not signal a banking crisis. It signals that liquidity tightened quickly and the Fed responded instantly. QT is already over. liquidity is being added again. This is not an official QE, but it is the early stage easing, the first step the Fed takes before shifting policy more broadly. Why does this matter, though, for markets? Well, liquidity direction drives markets more than anything else. I agree. When the Fed removes liquidity, aka QT, risk assets struggle, and we have been struggling for well over, roughly 11 months now. When the Fed adds liquidity, market gets support. The injection shows the Fed is alert to funding stress. The Fed will step in when liquidity tightens. The market is no longer in a pure tightening environment. Conditions are shifting towards neutral to easing. This shift matters for crypto especially. What could happen in the coming months for crypto? Well, short-term volatility could stay, but the medium-term setup becomes more favorable because liquidity is no longer being drained. Ending QT plus emergency liquidity is a meaningful shift. The Fed may have to provide more liquidity. If funding markets remain tight, more injections could follow, and then rate cuts will eventually align with improving liquidity when both happen together. Crypto historically performs stronger. Now, when we think about what's happening here, what should be the bullish outlook here? Well, regardless of bullish or bearish, I think that both scenarios do include a rate cut. And you might be saying, well, Nick, what do you mean by that? Because how could we have a bearish scenario if we are getting a rate cut? Well, if we're getting a rate cut and the Fed is really not acknowledging any of the big issues or the things that markets want to hear, aka we're typically looking at the labor market, which I did mention earlier, because again, it is a major key factor. If we're not going to see an insight into any of that, then I do think that markets are not going to really be affected in a big way. And most likely we see the opposite happen where we do have a possible sell-off. I think either way during an FOMC meeting, we typically have a sell-off anyways, and we really kind of witness that every single time. I saw a funny sort of meme from GSR earlier today, and it is kind of accurate. I mean, when we think about what's been happening with FOMC meetings, this is typically what ends up happening. So we have the rates decision, Powell starts talking, then we have Powell stops talking, and typically during this time, we have major swing highs, swing lows, and then we start to stabilize a bit. The main thing that we're looking at here for a bullish scenario is, like I said, Fed rate cuts. Then we start to see the liquidity injection. If we see an announcement regarding liquidity injections, that will be very bullish. And then we also have the labor market being weak. That's the three key. Now, the bearish scenario here will still be a rate cut, but the problem here is where we have the uncertainty about future cuts, and then no mention of bond buying or liquidity injection, and also admitting that inflation is still hot. We do not want to see that. We want to see the first scenario. So I'm still focused on the FOMC meeting. I know that a lot of people think that this does not matter, that it's all noise. And although, yeah, sure it is, it still gives us a nice direction of what to expect going into 2026. We already know that there's roughly a 94% chance that the Fed will cut interest rates. I feel like it's kind of obvious at this point that we're going to get another rate cut. It's most likely going to be priced in. We'll still see swing highs, swing lows. Volatility will still be there. But the main thing that we are looking at is what the Fed is about to do. And is that, the Fed about to unleash the bulls, or are we going to see the Fed unleash the bears? And that's only going to be determined by what the Fed puts a spotlight on. If we see, if we see talks about liquidity injections and also the fact that the labor market is weak, that's going to be very bullish. But if we see the opposite, then that's going to be pretty bearish, and nobody's going to know for certain what's going to be discussed here. However, if we are looking at what typically happens when we have an environment like this, where the Fed is cutting interest rates within 2% of stock market all-time highs, the S&P 500 has gone on to finish higher over the next 12 months, 20 out of 20 times, which is a 100% hit rate. Is this time different? I really don't believe so. I still think that 2026 is going to be pretty bullish, or at least the first half of it. Why do I say that? Well, because again, what's been happening with the Fed? Liquidity injections and liquidity itself it's been improving. And that's exactly what we want to see, especially in a market that thrives on liquidity. So far, the price action has been pretty consistent with the idea that we are starting to see some bullish price action form. I want to continue to see this. Obviously, right now with Bitcoin on the 24-hour span, we do have a slight lower high. So I would like to see this get broken over this week. So 93.7K would be the focus. If we can manage to close over that on the daily, that would be very bullish. We should start to build back to some of these key swing lows and swing highs. But ultimately, the focus right now is the Fed flipping on, the bullish take of things, providing us with an insight on, number one, liquidity injections, but number two, we also start to hear talks about how the labor market is weak. The markets would love that, and we should start to rally much higher. So these levels on these charts should get broken across the board. So we just need to be a little bit more patient. However, let's go back to that original view from CZ talking about how the 4-year cycle is now dead and that we are now in a super cycle. I do agree with him on multiple things here. Number one, could we see a super cycle? I think that it's going to be a typical bull cycle. I always hate the terms like super cycle or blow off top because, when we hear those, a lot of people go to the, drawing board and say, all right, well, what would be a super cycle or what would be a blow off top in crypto? And all of a sudden we start to see crazy price predictions getting tossed around. The main thing that we're looking at is just bullish price action forming again in 2026 with all-time highs across the board for a lot of altcoins and of course with Bitcoin. Now, I do think that that could happen, especially considering the fact that, we do have a little bit of a bullish environment, more bullish than ever before, with institutional focus, adoption. Of course, the US politics are also pretty bullish as well. Midterms are next year. So again, that's going to align perfectly with the liquidity cycle. And then, of course, we do have the Fed easing. And that's pretty clear by what the Fed has been doing already in the month of December since QT did end. So, the environment is pretty bullish. So no matter what happens during this FOMC meeting, I'm still expecting 2026 to be pretty bullish. We should start to see the market, rally back to the upside going into 2026. And, I just have a very solid outlook for, the first quarter of 2026. And we'll obviously circle back and kind of go over a few things, especially after tomorrow's meeting. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.